Hey everybody, welcome to Mortgage Today for Monday, March 25th, 2024, and oh, what a day it was. UMBS opened down 11 basis points. S&P futures were down 17.75 in the early trading. U.S. investors are cautious despite strong gains last week, waiting on upcoming economic data that will influence the Federal Reserve's decision on interest rates. This wait-and-see approach is fueled by concerns about high stock valuations after the recent rally and the desire for clues in the Fed's future monetary policy path. The upcoming week will have lots of important data, especially new home sales, sales prices, and personal incomes and outlays on Friday. The personal income outlay report contains the PCE Price Index, which is the Fed's preferred measure of inflation. We also have to wait until next week to see how the bond market reacts, since Friday is a market holiday. We also had Federal Reserve Chairman Powell speaking that day. The most important data point occurs the last day of the month and quarter, and markets cannot react. The former Fed Chairman Richard Clarida said that the Fed should be paying attention to the sticky price inflation and might not be able to cut rates 3 times this year. I do hope the Fed really moves into data-dependent mode, he said, because there can be a very good case if inflation is sticky and stubborn that they shouldn't deliver 3 cuts this year. If the Fed were targeting CPI right now, we wouldn't even be discussing rate cuts. Oof, don't like that. Ultimately, shelter is driving the higher inflation numbers, and the only way to get the shelter down is to see more home building. Unfortunately for the Fed, home building booms usually happen during easing cycles, not tightening ones. The week got off to a weaker start with most of the losses seen during the overnight session, but gradual ongoing selling during domestic hours. The week got off to a weaker start with most of the losses seen during the overnight session, but gradual ongoing selling during domestic hours. There were no overt market movers behind the weakness, unless we want to give credit to anxiety over the Treasury auction cycle or technical resistance. Even if auctions aren't the source of the outright weakness, they do likely have a hand in helping MBS outperform today. 5.5 UMBS were only down about 1/8 of a point, while Treasuries with comparable durations had lost roughly twice as much ground. Implication being that MBS don't have to worry about 3 big supply gluts start. With the implication being that the MBS don't have to worry about 3 big supply gluts to start the week. UMBS ended the day down 2 basis points at 100.98. So at 100.98, that puts us just right above that black 50-day moving average, with a couple of Fibonacci's above it that we would really like to take a run at.